Welcome to Volatility 411 for Equity Armor Investments. I'm Joe Tigay. Let's jump right into it. The dollar is down today and the market is having a nice risk on party. The S&P 500 is up 80 basis points. The VIX is pulling back to 25.5. And this is coming on the heels of about 2 weeks of a very strong dollar where we saw very strong risk-off action in the markets. We saw the VIX rise to about 27 and the market's having a significant pullback off of their recent highs. Now this is natural. When the dollar is stronger, things priced in dollars tend to go lower. Equities are priced in dollars. So is oil, so is gold. Those are also struggling over the past couple weeks. So this is what's going on. And for me, the reasons for this is simple. While the U.S. economy may have some holes in it, it's still viewed as the strongest in the world. The Fed is viewed as the hawkish central bank in the world. We're seeing dovish-ish actions coming from Europe, England, Japan, Canada. So the Federal Reserve has been more hawkish, and that's why the dollar has seen its strength. Now, for me, this relationship, were to flip on its head, and were we to see dollar down, risk off, that would be a much worse situation where people will be saying, oh, the Fed needs to pivot because the economy is now slowing down in the US. So I think if that were the case, I think I'd be a lot more worried about risk. So that's where we are right now. Now, there are reasons for optimism in the market. We have seen inflation peak. When that happens, that's a market bottom. We're also closing into very high sentiment levels on the bearish side. So every time you see a peak in expectations for a recession, that usually also corresponds with a market bottom. So those are two things that are good for the bulls. For the bears, we have a big CPI data point next week. I think, yes, maybe inflation has peaked, but if it stays higher for longer, if it doesn't come down as fast as people are projecting, that'll mean that interest rates need to stay higher for longer, just like in order to get that CPI or that inflation down quicker. So that's one spot for the bears. Also, that sentiment, while it is close to a peak, we aren't necessarily at a peak yet. There still could be more to go to the downside. In the VIX, heavy action in September of 30 calls. Those are currently priced at 90 cents. Two-way paper happening today, buyers and sellers. 150,000+ open interest on the line, and that's really interesting to see. That'll expire after the CPI number next week. So it's fascinating to see. That's where people are placing their bets on inflation ahead of that CPI number. For Equity Armor Investments, I'm Joe Tigay.